This is Chase Coleman, one of Wall Street's most secretive and intriguing billionaires. You won't find a single interview with him on the internet, and there are only a handful of pictures of him online. However, if he didn't already exist, Hollywood would certainly invent him. In 2001, at just 25 years old, he was given $25 million by his friend's dad to start his own hedge fund called Tiger Global. And today, Tiger Global has become one of the world's largest hedge funds with over $70 billion under management. During this time, they have returned 21% a year, destroying the S&P 500 return of 8% a year, so Coleman's fund has been wildly successful. As a result, Chase has been able to earn billions of dollars for himself, and in 2019, at just the age of 47, he became the youngest person in finance on the Bloomberg Billionaires Index. So Coleman is one of the youngest billionaires on Wall Street. But that's not all. Coleman is also a gifted athlete, and in his spare time, he's been known to play near-scratch golf or go surfing in the morning near his Hamptons mansion before helicoptering to his office. He's also married to Stephanie Erklins, who's been featured in the HBO documentary Born Rich. So Chase has a rather unique life. Fast forward to today, and Coleman currently has a net worth of $9.5 billion, putting him as the world's 229th richest person according to Bloomberg. So how was Chase Coleman able to start one of the world's largest and best performing hedge funds and become one of Wall Street's youngest billionaires along the way? Let's find out. Chase Coleman was born in 1975 and grew up in Glen, Long Island. Although this was a small town in New York, Glen is the country's leading city for cost of living and median household income, so Chase grew up in one of the wealthiest zip codes in America. Needless to say, his parents had pretty good jobs, and his father was a partner at Pillsbury, Winthrop, Pittman, which was a New York law firm, while his mother was the owner of an interior design firm. Coleman's grandpa was also a partner at another New York law firm. And going back even further, Chase is actually a descendant of New York's last Dutch governor. So Coleman came from a very affluent family. This led to him making some prominent relationships early on, and growing up, he was good friends with Spencer Robertson, who was the son of hedge fund manager Julian Robertson, who was one of the world's richest men with a net worth of nearly $5 billion. But more on that later. Of course, Chase's family also put a lot of importance on education, and growing up, they sent him to some of the best schools in the country. So in 1989, as a freshman in high school, he enrolled at Deerfield Academy, which was an elite prep school in Massachusetts. Over a quarter of Deerfield's students go on to attend Ivy League colleges, so this was truly one of the best high schools in the country. As a result, Chase took his education very seriously, but he was also heavily involved in sports too. Chase was on the school's varsity soccer, hockey, and lacrosse teams. So in addition to being very smart, he was also an excellent athlete. Chase would graduate Deerfield in 1993, and from there, he followed in his grandfather's footsteps and decided to enroll at Williams College, which was one of the best universities in the country. Here, Chase majored in economics and Spanish since he wanted to get into the business world. Coleman was also on the school's varsity lacrosse team, and he was even named the team's co-captain. Then, just 4 years later, in 1997, Chase graduated Williams College, and although this would mark the end of Coleman's formal education, little did he know the opportunities that were about to come his way. Straight out of college, Chase's relationship with the Robertson family would immediately provide him with a unique opportunity, and in 1997, he went on to work as a technology analyst at Julian Robertson's hedge fund called Tiger Management, which was the second largest hedge fund in the world at that time, managing over $10 billion. Given that it was during the beginning of the dot-com boom, this was a very attractive opportunity for the 22-year-old Coleman, since he was able to learn more about the booming tech industry while also spending time in the hedge fund industry, which was an industry he was very interested in. As for Robertson, he said that he'd known Chase since he was a young boy, and he was a good friend of his son, so Tiger Management was a natural first job. Chase was immediately very successful in this role, and within 3 years, he was promoted to a partner position for his performance, so he was doing very well. The fund was too, and they were up over $2 billion by 1998. However, all of this success was happening during the late 1990s, during the height of the dot-com bubble. So naturally, when the bubble burst, so did Tiger Management. The fund lost nearly $2 billion in a single day, thanks to a poor bet on a company called US AIRWAYS, and from there, they were never able to recover. As a result, Julian was forced to close the fund in March of 2000 and return all of his investors' money. This should have left Chase without a job. However, Chase's prior performance really impressed Julian, and after closing the fund, Coleman was put in charge of managing Robert's personal capital, which was millions of dollars. Then, just 1 year later, Julian would take another bet on Chase, which further changed his life. Robertson was looking for new areas to deploy his money, so he handed Coleman $25 million along with an office space to start his own technology-focused hedge fund. Chase immediately jumped on this opportunity, and in March of 2001, he opened his own hedge fund called Tiger Technology, although they were later renamed Tiger Global Management. This officially made Chase a Tiger Cub, which was a term for the fund managers who started their careers with Tiger Management. In total, there are over 30 Tiger Cubs, which include legendary fund managers like Lee Ainsley and Andreas Halvorsen, so Coleman was already in good company. Outsiders were skeptical that this fund would be successful though, and many prospective investors didn't take them seriously since 2001 seemed like a poor time to be starting a tech fund. Even Julian Robertson, who gave him the money, said at the time, "I don't even believe in tech that much, and it's not the place to be." Chase ignored the noise though and said that this was his chance, so he wanted to make the most of it. To help him, Coleman would almost immediately bring on a man named Scott Shleifer. Shleifer, who was also in his mid-20s, was a loud, enthusiastic presence who had just completed 3 years of 80-hour work weeks as an analyst at BlackRock, so this was a perfect fit. Scott turned out to be an excellent hire, and right away the duo would start looking for investment opportunities. And little did they know, they would usher in a whole new way of investing. Tiger Global got off to a sizzling start, and in late 2002, Shleifer approached Chase with 3 Chinese tech companies dubbed the Yahoos of China: Sina, Sohu, and NetEase. Due to the lack of opportunities they were seeing in the US, Coleman was immediately sold on the opportunity in China, and in total, the duo invested $20 million of their $250 million into these companies, making Tiger Global the largest public shareholder in China's digital economy. At the time, this flew in the face of traditional hedge funds who were very close-minded to the idea of investing internationally. It also took a lot of conviction from Coleman because at the time, he had never even been to China. However, he wasn't worried because he remembers Julian Robertson telling him, "Why sit here and hit major league pitching when you can go to Japan or Korea and hit minor league pitching?" Chase's contrarian approach paid off, and by mid-2003, each company had appreciated 5 to 10x, generating Tiger Global millions of dollars. This early success attracted a lot of money, and in less than 1 year, Tiger's assets had grown from $250 million to $350 million. And this would mark the beginning of Tiger's decades-long run as one of the world's best hedge funds. Following Tiger Global's early success investing internationally, Chase decided to double down on what was working, and in July of 2003, Coleman wrote a letter to investors announcing a new private investment partners fund. This allowed Chase to focus even more on international investments, which no one was doing at the time. And since it was a private equity fund, they could also invest in companies that weren't even publicly traded yet, which is where Coleman thought he could generate even higher returns. Although this new fund didn't generate as much interest as Coleman had hoped, he was still able to raise $50 million, which gave him enough money to make 4 more investments into Chinese tech companies. One of those investments was into a company named Ctrip, which was considered the Expedia of China. And within 71 days, they were up $40 million in this investment. So Tiger's international strategy was continuing to produce stellar returns. This success gave Coleman and Shleifer a lot of confidence, so in 2004, the duo decided to test their luck in a new market, which was Russia. Shleifer flew to Russia to meet with Russian billionaire Yuri Milner, and he was so impressed by the opportunity there that during the first half of 2004, the fund made investments into Rambler, Yandex, and Milner's company called Mail. Tiger Global continued to expand their reach even further, and the following year, they entered Latin America. Then, right on brand, Tiger decided to enter another market, and in 2006, Chase hired a man named Lee Fixel to look for investments in India. Between Coleman, Shleifer, and Fixel, Tiger Global is finding remarkable opportunities around the globe, and from 2001 to 2007, the fund delivered an annual return of 47% a year, which was ridiculously good for a hedge fund. In fact, the strategy of investing globally was working so well for Tiger that Yuri Milner, who was running his own hedge fund in Russia, said that his eyes were opened at the possibility of investing in other countries. So Chase's fund was totally changing the way investing was done. As a result, Coleman raked in millions for himself from performance fees and gains on his personal investments, and by 2007 he was starting to get close to becoming a billionaire at just the age of 32. With all this money, Coleman purchased the entire floor in one of Fifth Avenue's most exclusive apartment houses for $36.5 million. He also purchased a 5-acre South Hamptons estate on Billionaire Lane for $32.5 million, which he uses to take a helicopter to his Manhattan office. So at just 32 years old, Coleman was already one of Wall Street's richest men, and he had the lifestyle to back it up. However, Chase was about to take the first hit of his career, and the 2008 financial crisis would be the most challenging time in the fund's history. Heading into the 2008 financial crisis, things were looking great for Tiger Global. They were fresh off a staggering 73% return in 2007, and by the middle of the year, they just started 3 more private investment partnership funds and raised over $2.5 million. So investors were throwing cash at Coleman to invest. However, Chase started to lose focus during this time, and he began to spend most of his time looking into industries he had a negative view on, like banks and cyclicals, which distracted him from buying tech companies, which was his forte. As a result, Tiger got smashed during the Great Recession, and in 2008, the fund returned negative 26%, making this the first negative year in the fund's history. 2009 would be another underwhelming year, and the fund returned a paltry 1% compared to the hedge fund average of 18.7%. So Tiger Global really struggled to navigate the Great Recession, which caused many investors to question Chase's ability to manage money when the markets weren't doing as well. Chase used this moment to learn though, and during this time, he vowed to return to his tech roots and avoid industries where politics and macro events could interfere. As a result, in late 2009, Chase and his team made their first investment into a US company, purchasing $200 million of Facebook stock. Tiger Global followed this up with more early investments in US companies like LinkedIn and Zynga. They also decided to get more involved in India, and in 2009, they purchased e-commerce firm Flipkart. The fund also made a $200 million bet on Chinese retailer JD.com. So following consecutive disappointing years during the Great Recession, Tiger Global went on a massive buying spree. This approach paid off spectacularly, and when it was all said and done, their Facebook investment made them over $1 billion, and Flipkart generated them over $3 billion. However, JD.com was Tiger's best performing investment, and this single $200 million bet produced over $5 billion in profit. As a result, Tiger Global was named the most profitable hedge fund in 2011, generating a 45% return, and they followed that up with a 21% return in 2012. In total, they returned over 20% a year on average from 2010 to 2015, beating the hedge fund average by 5% or more every year during that time. So following Chase's 2 worst years of his career, the fund was able to regroup and have a few of their best years ever. This helped Coleman rake in millions more dollars, and by 2012, he officially became a billionaire at just the age of 37. As a result, he bought another floor in the same Fifth Avenue building for $52 million in 2016. Then, in a rare moment of publicity for Coleman, he invited a bunch of celebrities, including Paris Hilton, over to vandalize the soon-to-be renovated apartment. So following his brief scare during the Great Recession, Coleman was back. Over the past decade, Coleman's fund has continued to climb the ranks as one of the world's largest hedge funds, and since 2014, Tiger Global has raised 7 more private investment partnership funds, bringing their total to 14. So Tiger has really been ramping up the venture capital side of their business. With each new fund, Tiger Global has raised more money than the previous one, and recently they raised a record $12.7 billion to open Fund 15, which is the biggest venture fund on record. In total, Tiger Global now manages over $70 billion, and they have over 100 employees, making them one of the largest hedge funds in the world. Even with this size, they've continued to make good use of investors' money though, and in 2014, the fund made a $10.5 million investment into Peloton, which generated them over $1 billion. They've also made some other notable VC deals recently, and in 2018, they invested $500 million into Coinbase, resulting in a whopping 10% stake in the company at the time of their IPO. They've also made other investments into companies like ByteDance, which is TikTok's parent company, Stripe, Roblox, and Snowflake, just to name a few. As a result, Tiger Global has continued to generate outstanding returns, and from 2017 to 2020, the fund returned nearly 29% a year, and this was highlighted by their stunning 48% return in 2020. So needless to say, Tiger Global has become one of the premier names in venture capital. Overall, this strategy has been wildly successful for Tiger Global, and since their inception in 2001, they've returned 21% a year. So if you invested $1 million with them at inception, it'd be worth $43 million today, compared to $5 million in the S&P 500. However, their private equity portfolio has performed even better, and since launching in 2003, it's returned a stunning 33% a year before fees and 26% a year after fees. Now, even though Tiger Global has really struggled so far in 2022, as many tech stocks have sold off, they've been incredibly consistent over the years, and Tiger has only had 3 negative years: 2009, 2016, and 2021. As for Coleman, this all paid off very handsomely, and in 2019, he became the youngest person in finance on the Bloomberg Billionaires Index at just the age of 47, so he's one of the youngest billionaires on Wall Street. Chase followed that up in 2020 by becoming the US's #1 hedge fund earner, making $3 billion for himself in just 1 year. As a result, Coleman currently has a net worth of $9.5 billion, putting him as the world's 229th richest person. And considering it all started with a $25 million gift from his friend's dad, it could easily make Chase Coleman's story one of the most unique for a hedge fund manager.